Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on the biotech sector after another bounce attempt and another lower high looks to be forming. We can see a very clear upper wick on Friday with profit taking, lack of follow through for the bulls, rejected from the 100-day moving average resistance of 62.63, and we can see from the high of the bounce after the election, it's been nothing but lower highs and lower lows. So a new resistance level is 62.70, still watching 63.75. We need to break these levels and break the lower high pattern in order for the bulls to have any momentum back to the upside. We are fairly close to a bullish MACD cross. If we do see that break of the lower high pattern, that should be pretty clear to follow through. Weekly time frame shows consolidation still occurring. We are defending down here the $60 range, and it is a bullish reversal candlestick again here on the weekly, so we need to see confirmation next week. Otherwise, we're on the verge of a bear TCG cross here with the 4-period crossing the 8-period back to the downside. Checking in on IBB. So XBI is the S&P 500 biotechs. IBB is the NASDAQs, and it had a very similar candlestick on Friday, but it is ahead of the game in terms of reversing this trend. And we can say that because we had this high of 275.39. That was a double top, 275.39. So 2 bounces attempted to get over that level, and we did break that level, but obviously not in a very convincing way. So it's not a clear bull break. We need to get over that middle Bollinger Band on the daily time frame and see a close above 275.39. A bullish MACD cross will follow through as well. But the bulls are doing a better job of defending the higher low pattern on this bounce attempt, and we can see IBB already filled its gap to the downside at 265. And we look at XBI, and this gap is at 58.54. We have not filled that yet. So on the whole, XBI is still stronger on the daily time frame, but it's almost like IBB is a step ahead of the game in terms of reversing the trend because we have already filled the gap, and now we're close to breaking the lower high pattern. LABD, not going to look at LABU because it's pretty much the exact same chart as XBI, and I would rather use XBI in those moving average resistances rather than the 3 times ETF in their moving average resistances. But it's always worth checking in on LABD because it is a different perspective, looking at things from a bear perspective. And we can see we're still forming very clear higher lows with lower wicks of bulls buying the dip off the middle Bollinger Band support of 16.25. So a clear $18 psychological resistance. Look at the rejections we've had from this level. 1, 2, 3, 4, 5, 6 times in the past few weeks. Close above $18 will show bullish continuation for the bears, and a loss of the middle Bollinger Band will have us looking down at 15.45 and 15.17, which would mean the biotech bulls are taking back over. So it's worth watching LABD to see if we lose the middle Bollinger Band support, which would tell us to begin looking bearish again or bullish again on the biotech sector. Weekly time frame for LABD, very clear downtrend, and in part due to the time decay associated with the 3 times ETF, rejecting from exponential resistance, and really no strength here, no sign of turning around the long-term trend on LABD. And last, we'll look at individual name here, VRX. We had VRX on top watch on Friday. Due to the bullish action on the end of the day, Thursday, bullish reversal hammer, and we did confirm it, making a nice move up to 14.23, and the bulls closed above $14 psychological resistance. So very clearly still a downtrend, and whenever we're playing a downtrend, we know that the bounces are going to be short-lived, and we need the bulls to prove to us that they have strength. So we have these exponential resistances, which have been rejecting the price for a month now, and we have to see the bulls form higher lows and higher highs to try and reverse this trend, which as of right now, looking at the weekly time frame, another bullish reversal candlestick that was not confirmed, and we have now seen red weeks. I mean, it's pretty much been an entire fall and early winter of just straight up red in VRX. And we're looking down, we had that support of 1377, and although we broke below it, the bulls still closed above that support. But we're on the verge of another leg to the downside if the bulls don't amount a rally here. And we haven't seen a solid green candlestick on the weekly time frame since back in August. So it has now been 4 months without a solid week for the bulls. The bears still clearly in control, but we're seeing a short-term oversold bounce develop on the daily time frame. We'll see if we get some further upside there on Monday. So that's the way the biotech sector is shaping up. Certainly has been one of the weaker sectors when you look at the tech sector and the financial sector over the past week or two. But we're definitely keeping an eye on XBI for the long-term bullish trend that it has been in since the start of the year with higher lows and higher highs. That is still intact. So just patiently waiting for the bulls to prove to us that they are back in town. I appreciate you watching. Have a great rest of your weekend.